time for some Investing 101. Julie Niemann, the Senior Vice President at Smith Moore, is here to help navigate the market. Julie, some investors may be wondering if they need to make any adjustments or perhaps prepare for rate cuts later this year. What are your thoughts?
No, there's nothing to do to prepare, because I'll tell you what happened was the Fed was saying we're going to have a gradual slide and decline in inflation, and then 2022, they lowered a boom that nobody expected and wiped out absolutely everything. There was nothing in investable assets that wasn't absolutely hammered. It's the first time we've seen an across the board wipe out of everything. So when the Fed moves, it's with a blunderbuss. At this point, I think, though, they're going to be a little more delicate in transparency on it, but they don't have to drop interest rates like a rock. Wall Street's continuously optimistic, hoping that they're going to get big drops because they love playing with free money. It's gone. You're not going to have that opportunity anymore. But it's not going to be the rates that's going to put the end to this economy.
Is there any upside for investors when interest rates are a bit lower, but still there compared to back in the day when interest rates were around 0%?
When you have modest interest rates, you can still get credit. You can still continue to build, to use it for expanding your businesses. And that's the key thing. So they will be coming down, but it's going to be very measured gradualism, because they've got a couple of things that's working against them. One, their data is delayed. So things have already happened by the time they're getting the data off of this. The data that they're receiving is very narrow. There are broader areas they have to take a look at. So they're broadening the spectrum of tools that they look at to get good, clean information, and that is a problem. We have it available to us. There are good economists out there who are looking all over. They can tell what the real rate of inflation is and what the Fed should be doing. So don't worry about the Fed. Filter your money into the market, getting into fixed income while there are opportunities, but don't put it all on number 7 and pray. This is a case of gradually moving into areas, because if you get corrections in the market, you'll get some bargains.
Always the voice of reason. Thank you, Julie.
Glad to be here.
Go to businessfirstam.com for where to see our show on TV.